Well, you can see why investors are concerned. It's the world's second largest economy, and after accelerating in the fourth quarter, China's apparently losing momentum. We had hoped that with a new government, some new economic policies, you'd see a boost. It didn't happen. Growth comes in 7.7% year over year. Now, China doesn't calculate GDP the way we do. They look at production rather than expenses, and they don't annualize. If you analyze the way the U.S. does, growth was only 6.6%. Industrial production, the real culprit, 40% of their economy slowed significantly, particularly at state-owned companies. Government's also trying to curb that housing bubble over there, instituting new taxes. Housing starts fell more than 20%, and they've had an anti-corruption drive trying to cut back on spending by the rich and powerful. It apparently worked. Retail sales growth much lower than that had been expected and was in the fourth quarter. On the other hand, even at 7.7%, that's faster than the 7.5% annual growth rate. So it doesn't look like we're falling off a cliff here. And now that the impact of these slowing efforts is in the economy, may not be as bad in the second quarter.
Futures here are also down, Mike. I mean, how worried should investors be?
Well, it doesn't look like this is going to continue, as I say, for a long time. But Barclays says China may be in the midst of what you'd call a new normal now, its own version. The trend, certainly not the market bull's friend. The growth rate continues to slow under strong international pressure. The yuan strengthening considerably. The impact on exports supposed to be offset by domestic growth. That's not happening fast enough. They've also got this ongoing inflation problem. They've been trying to rein in the growth of the shadow banking system there. So you still see some problems with China. And while it's not going to lead the world into another recession, analysts say get used to 7 to 8% growth rather than the double digits we've been used to.